You've been waiting for a crisis, and I'm here to tell you it's not the one that you anticipated. You came here for the truth, so let me unveil that for you. In today's video, we're going to look at something that many didn't expect, but here we are. It's important to look at the jobs market. It's important to look at what's happening with freight. It's important to look at things that are happening in China as well. But wherever you look, understand that there is usually the opposite scenario that unfolds based on what most people thought. If most people thought it's going to go left, it's probably going to go right. That's just the way it is. And everybody expects a deflationary environment and a super mega crash that gives you the opportunity of a lifetime. But understand that that's not nearly what occurs because there's too many people thinking that way. In fact, while the market is pessimistic in its mentality that, look, we're getting a little too crazy, nobody's trading that way. Nobody's investing that way. There's something going on. Let me show you. I'll explain. Here we have it. A new headache for bosses. Employees aren't quitting. Just last year, companies were struggling to keep staff. Now they say there are not enough people are leaving their jobs. They want people to go. They want to get rid of them. They want to pay them. But they're just hanging on. And of course, in some cases, it's difficult to fire them. They don't want to package them out. They just want to leave on their own will. Just go. Get out of here. But that's not the case. All right. Turnover has declined so steeply at some large employers that companies now find themselves over budget on certain teams, requiring leaders to weigh whether to postpone projects or to cut additional staff at the end of the year. Their bosses worry about how to keep their star employees engaged when there are far fewer vacant positions internally, making it harder to move people into new roles. That's big stuff. Okay, that's the big corporations, and we know that. But what are companies doing? A lot of them are laying off. A lot of others are saying we're trying to replace employees with AI, with automation, and with robotics. This is not just me saying this. I covered this on the Money GPS Finance Live just recently, and I quoted Perry Belcher. If you're not aware who Perry Belcher is, this guy has been around a long time, since the 90s, doing a lot of things, very successful guy, and his company back in the day was actually approached by none other than Jeff Bezos. Jeff Bezos, he has this thing called Amazon.com at the time, and he calls up Perry Belcher and he basically said, hey, we'll make you an offer. Perry Belcher said in the end, he didn't accept the offer. Things were different back then. And he basically said, that cost me probably about $750 million. Now, he's still successful in things, but the point is, I'm just trying to show you that this is somebody who's been around a long time, made a lot of good decisions. And this guy specifically said a few things. I watched, some information that he had to share. And he said companies across the board are implementing and are trying to implement AI, automation, and robotics, completely going in line with what I have said. And this is the high level guy. You got to understand that. He's seeing this on the ground, building companies. The guy's got countless companies. He works for countless companies, consulting and everything else. They are doing this. So the jobs market is different. You go through a cycle. You don't hire back. You implement AI. You increase profit. Anytime a company is going to implement some sort of AI, robotics, and so on, they're going for increased profit that could make their stock look more attractive. So if you're an investor, look at that. But if you are an employee, realize, is this company going in that direction? Watch out. Be careful. Who could this possibly affect? Auditing companies, financial companies, mortgage. There's most industries could be reduced significantly. Their headcount could be reduced. There's a lot of companies that will, like financial companies, back office, they might outsource some of it, but they can also use a lot of new tools that exist today that didn't exist, let's say, 5 years ago. They can read a document, they can process that document, and now all you need is quality control. You don't need people doing data entry. Gone are the days. So watch out. Be very clear on where your skills are and what you need to upskill on. Citigroup considers deep job cuts for CEO Jane Fraser's overhaul called Project Bora Bora. You probably heard of this before, but the point, all that is to say that many different companies are laying people off. It's not just the financial industry. I'm seeing it across the board. Griffin says peace dividend is over, high inflation to last decades. Higher baseline inflation may last for decades, and the US is spending like a drunken sailor. Deficit is unsustainable. You've heard me talk about this before, numerous occasions, but understand the Federal Reserve, they have to be the buyer of last resort. They're going to buy that debt up that is created by the government. And that means that your value of your dollars has to go down. This is inevitable. It's not just Ken Griffin. It's not just from Citadel. It's not just Ray Dalio. It's not just Warren Buffett. This is it. This is going on. More deficits are expected. And as a result, simple matter of fact, they have to either give a higher interest rate on that, meaning that the US government long term, they just can't pay that. Or directly, the Federal Reserve monetizes that debt. And what does that mean? That means that they have to go in, print a bunch of money, and buy that stuff up. Either way, long term, medium term, short term, devaluation of the currency. You could have a deflationary event. That could happen. But it's met with inflation, heavy inflation, in fact. What we saw from 2020 into 2023, that was inflation. Prices of everything have gone up. You got to know, my base case scenario is that we experience another round of that. What do we experience? I mean, real estate prices went up by 50%. That's not good. That's very unhealthy. And where are we going to, how's that going to happen? People can't afford it. Oh, don't worry. There's always money. It can come from somewhere. As soon as prices start coming down a little bit, you have an investor that comes in and buys that up. Oh, don't worry. Blackstone will buy it. Don't worry. One of these big conglomerates will buy that. You don't have to worry about Jack and Jill buying up that house. People are thinking, they're thinking this is in a completely wrong way. These companies are waiting for prices to come down just a little bit so that they can get in there and buy them up and rent them back to you. Don't you get it? Don't you see? They don't have to worry about the price value, the valuation of those homes, single family homes that they're renting it to you. They have to worry about their cash flow. And as long as they can make it cash flow, they can get into that investment. I hope you understand what I'm saying here. This is extremely valuable information right on the cutting edge. If you do agree with me, hit that thumbs up. If you disagree, put it in the comments below. Let's have that discussion. Are you willing to? Come on. What's it gonna hurt? All right, let's do it. Taylor Swift fans in Argentina have camped out in tents for 5 months in order to be front row at the Eras tour. People are very upset with us. I had to read the article when I read that title, shocked, but essentially they're taking turns in a tent because they want to see Taylor Swift. Now, I don't know what to say about that, but it shows us that people are willing to spend money. There is, they said that this actually boosted the economy, as well as, the Barbie movie and all these things. People are spending the money, but what do we know about it? They're spending more on their credit cards. They're getting into more debt. They're doing the buy now, pay later. They're doing these things at a time in which things are very expensive when we are at the end of a cycle. It is extremely dangerous, of course, but I wanted to signal that people will go Wile E. Coyote right off the cliff if that's what it takes. Don't expect there to be like this slowdown. People tell you that, there's a warning indicator here. They don't know. They haven't studied the history. It is an absolute fact that retail sales will not necessarily decline in advance of a recession. That doesn't happen. The data is not there to support that. But, you don't get that in most places. Soaring U.S. childcare costs are weighing on spending in the labor market. There's no question about that. If people have to pay for their childcare costs that have gone up, as they say right here, 32% since 2019. What kind of nonsense are they telling you about 3% inflation rate? I mean, it is a slap in the face. I just got slapped right in the face when I read that stat. Right in the face. Housing affordability hits a 39-year low. It's fair to expect prices to weaken. Yeah, sure, absolutely, they can weaken. How much, though? Well, if you're in a tertiary place like not the primary places, but we're talking about, the third rate levels in the smaller towns and those things. Yeah, absolutely. Prices can weaken. But with the way things are going, you gotta understand people are sitting, waiting there in treasuries, and they just want to put their money into a hard asset. And they're waiting for that opportunity, but the prices are too high right now. They've got the cash in treasuries. There's a lot of money sitting there, but they want to invest it in something like real estate. They want the cash flow, they want the tangible asset, but they're getting 5% on their money. So why bother? Just put it in there. Let's wait. Maybe prices will come down. Who knows? At the same time, if they're going to be buying more real estate, if they're going to be buying more stocks or who knows whatever, that makes it even harder for the government because they cannot go into the debt that they thought they could before. It causes a contraction of the economy as well. So pay attention to that. Target CEO says shoppers are pulling back even on groceries. There's no question about that people do not have the cash to spend like they did before. Why? Well, they've already gone to the maximum in their credit cards. This is crazy. $1 trillion, a record high in usage of credit cards. And guess what? At the highest interest rate we've ever seen it, over 20%. A lot of these cards are at 25 to 28% interest rate. You can never pay that back. It's impossible. Let's be honest. It's impossible. So they go bankrupt. When they go bankrupt, that has a cascading effect. Too many bankruptcies, defaults, that starts to affect the companies. The companies start laying off. One thing leads to another, and you have a big issue. Retail vacancy rates in major cities have soared as much as 30% since 2020. And in some superstar urban cores, they could rise by another 26% this decade. So of course you're seeing that, like Fifth Avenue and all these places, there are vacancies everywhere. And what do? Did they like decrease their price and hey, everybody come on in? Not at all. They leave them boarded up. That's the world we are in today, where they're not really willing to accept a lower price necessarily. And a lot of these places, they are empty, and they've been empty for a long time. They are unwilling to, because then all the other ones, they start to say, oh, you decreased the price for them. I want to decrease price as well. And it causes this problem widespread. They can't do that. They won't be able to meet their obligations on their debt. That's the issue we've got right now. Big concerns all around. And so you got to realize something. You got to know that there may not be an opportunity of this big crisis, 50% crash. You're going to come in and swoop in. You got to get your situation right. You got to be able to increase your income by 50% year over year. I said that. That's difficult. Or at the same time, with the pillars of prosperity, there's increasing income, but you also got to understand that you can be more self-sufficient so that your expenses go down, but you can only squeeze so much, but you still got to try as best you can. If you want to know about, to speak to a CFP, you want to speak to a fiduciary, and you want to do so for free, I hooked up with this company. I partnered with them specifically because I wanted to offer a free service from somebody who that seems good, and all the feedback I got has been very good so far, and it's Money Pickle. So you can go there, click on that link. It's going to bring you directly into my little portal page that they set up, and you book a time right there with them. Get your situation in order. Start today. I've also created Compass for you, which is on my website, themoneygps.com. But check it out. Why not? It's free. Take the call that they get, and they are not allowed to make it a sales pitch. I've made that very clear with them. And leave me some feedback. Okay. Comment of the day. Sour West says they'll just change the definition of recession again, like they did last time. We are truly living in a clown world. And just onto that as well, government already said no recession. Someone clearly didn't trust the economics. That's right. Don't wait on the whole recession indication. We've got to know that with the real stuff, the real data. That's what we're facing today. I hope you appreciated this. If you did, hit that thumbs up button. If you disagree, let's talk about it. Let's have that argument. I hope that you will join me in tomorrow's video where I've got more jam-packed information. I'll see you then. Take care.